Welcome back. It's steady, a gain of about 0.6% on the benchmark indices, but off from the record high that we hit of 22,530. From that level, we've given up close to about 60 points, but still very strong and steady. Mid-caps are outperforming, 1.5% up on that index, with the advanced decline ratio boasting of 2,100 stocks in the green. Manish Jain, the head of Management-PMS Equity Advisory at Centrum, is now with us, and he's going to talk about the analysis that he's done of the market performance pre-post-election. Manish, thank you very much for that. So start with that, right? What does history tell us about the correlation between market performance and elections?
So it's a very interesting point that we are at in this juncture as far as the whole market's journey is concerned, where everybody's waiting for the next trigger. March was obviously a little bit topsy-turvy, largely because of a little bit of concern on valuation, RBI, SEBI overreach on that. But I think things are looking to get settled now. Where people are going to now incrementally look at more and more going into the future on two major events. One is going to be the post-result commentary on FY25 that the companies are going to make. And the second thing is going to be on the elections and election results and what happens over there. Now, a lot of conjecturing is being made whether, if the present incumbent government comes back to power, say, with a lower mandate, with a higher mandate, what happens over there. And what we've discovered when you look at, in general, the last 30 years or sort of data, is the fact that there seems to be very little correlation over a long-term period over the kind of government that comes into power versus what the market expectations are. So if you look at it, when the market has been negatively surprised in the ensuing 5 years of that, say between 2005 to 2009, the market performance was spectacular. But when you look at 2014 to 2019, when the market was very, very positively surprised with the election results, the overall market performance was very, very muted. So per se, over a very long period of time, it's the economic policies which kind of define the market direction rather than the incumbent government. But over a very short period of time, say in between 3 to 6 months, as long as there's political stability, as long as there is no coalition government that comes into power, and as long as there's continuation in policies, the market typically tends to do well. And whenever there has been a stability in political environment, those are the times when overall GDP growth rate, the overall economy has kind of done well, and resulted of which the market has done well. So I think from a next 3 to 5 year perspective, given the spectrum of the election results that we are kind of staring at, I think the market should broadly be okay and do well.
Okay, yeah, that's an interesting study, Manish, that your team put together, and it's really helpful, right? Gives us just perspective going back in history and seeing if there are correlations. And frankly, as your study points out, there aren't any. As long as you have a stable government, the market's fine. So, if we take that out of the equation, then a lot of the other factors seem very, very rosy. In fact, some will argue it's almost too good to be true, right? Earnings growth has been steady. Lots of retail, flows are coming in. Corrections are getting snapped up. They're getting shallower and shallower, not even 5%. So are you still in a full bull camp? Or do you think there's something on the horizon that could kind of, offer some more volatility?
Absolutely in the bull camp from a 2 to 3 year perspective, but I think FY25 or rather CY24 is going to be a little more volatile than what we've witnessed in the last couple of years. CY22 was like a dead man's ECG. It was like absolutely a flat line while we were climbing the mountain in 23. This is going to be the year where there are going to be concerns that are going to play out in the absolute near term, which the market is not looking at right now. So, for example, Q1 and Q2 earnings growth could be very, very tough. From what we are looking at, people are building in anywhere between 1100 to 1150 sort of an EPS from Nifty perspective for FY25, which is roughly a low double-digit kind of a growth. Now, that could be very difficult given that margin expansion will be now history, but overall consumption growth does not seem to be picking up, especially at the mass market level. So if Q1 and Q2 are a little challenging and the growth is going to be more back-ended, then that could be one interesting factor to kind of watch out for, which could lend market a little bit of a volatility. But like I said, given that I'm in a bull camp from a 2 to 3 year perspective, every correction that happens, I would go shopping and I would buy quality companies from a 2 3 year perspective, and there are enough. If you do a proper bottom-up analysis, even in these markets, doesn't matter what people are talking about from a valuation perspective, I think there are still, even in the mid and the small cap genre, there are still ideas which can be looked at very, very favorably.
So you're saying that on every correction, you would bring out your shopping basket. I was looking at your portfolio, and one of the stocks, one of your top 10 holdings is AU Small Finance Bank. And that stock has had a rough start to 2024. I think it's down 26% from the beginning of 2024. So in this correction that's taking place in AU Small Finance Bank, have you bought, and what makes you keep the faith on that particular counter?
So overall, we continue to remain very constructive as far as BFSI is concerned. Obviously, the strategy is going to be not as homogeneous as, say, it is going to be in large cap IT, right? Large cap IT, if I go shopping today, I'll probably end up buying everything and anything, because the view that we have is that much more bullish over there. But here, if you look at it, even in the large cap IT space, there are a couple of names which are very mouth-watering. They are at a 10-year low valuation levels, and I would definitely look at buying them from a 3-year perspective. Does not matter what people are talking about from absolute near 2-3 quarters perspective. There is always light at the end of the tunnel. We as human beings tend to overplay the concerns in our mind. And even when you look at the small finance banking space or NBFC space, that's again another space where we have been continuously adding, weight in the portfolio in this current correction. So autos, BFSI, and IT, these are the 3 spaces where we continue to remain absolutely constructive.
Very quickly, Manish, we only have 10 seconds left on the chat, but I think in your mid-cap strategy, there are quite a few interesting stocks, and some of them represent consumption, urban discretionary consumption, the likes of Sula. Now, Trent, I don't know where to put it. It's not really discretionary, but what they've done with Zudio is mass level, and yet, what a story that one's become. Just leave us with your thoughts on consumption and, in general, anything else that you're any trends that you're analyzing in the mid-cap space that you like.
Discretionary consumption, leverage consumption, urban consumption. Those are the areas which will continue to do well. Not very bullish on mass market consumption.
Okay. Out of time. Thank you very much for joining in. As we slip into a break, we have an announcement to share with all of you. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate, Personal Finance Handbook with Sonia Shenoy, where she will be joined by 3 well-known experts on Saturday, 11th of May, 9 a.m. onwards. We will be diving into everything you need to know to master your finances and learn how to grow your wealth. Be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to learn and lots to do. Whether you're in your 20s, 30s, or even 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to cnbctv18.com, and we will see you on the 11th of May.